Welcome to Mutual Fund. Sahi here presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. This Women's Day, we are celebrating the incredible strength and resilience of women. And today we will discuss something truly important, prioritizing your financial well-being. As women, we've always been at the forefront of saving and investing wisely, whether it's been keeping the savings in chawal ka dabba or taking the smart step of investing in mutual funds. Financial independence has always been a part of our journey, even if it hasn't always been in the spotlight. So how do we as women plan our finances, make wise investments and create a solid foundation for the future? Today, let's explore exactly that. We have two experts joining us today. Joining us virtually is Mrin Agrawal, financial educator and CEO of FinSafe India. And in the studio, we have Kavita Menon, founder of Probitus Wealth. All right, so welcome to the show, Mrin and Kavita, and it's our Women's Day special today that we are celebrating on the show, and we are going to talk about definitely women investors and women investing trend. As we all know, and it's been very well established that women, they are not only Grah Lakshmi, but the actual Lakshmi, okay? And when it comes to saving, they are natural savers. I think everything about money naturally comes to women. But despite that, Kavita, if I can just ask you, what is the biggest challenge? Or how do women actually understand financial independence? You think women are really aware about this particular aspect of independence, which is everyone's right? How, according to you, would they understand financial independence?
So, Kavita, thank you for having me on the show. From my experience of the last 2 decades, my opinion is that for women who are, not aware about financial independence are the women who are, whose mindsets are very firmly entrenched in patriarchy. So, it starts right from the education that we have, the choices you make for your careers. Yes, it starts from home. Yes. Yeah. It goes into the career choices. From career choices, it goes to how much we save, our ability to earn, and the assets that we build. So it's completely encompassing everything. Right. So if at all you want to achieve financial freedom, it has to start somewhere. Something has to break this patriarchal mindset.
You should be able to think about what's wrong in it. Mrin, do you think that women, do you realize that there is something wrong in this entire mindset, or there's something lacking, or there's something that's missing, for them to take control of their own lives maybe?
Oh yes, absolutely, Kavita. And happy Women's Day, and thank you for having me on the show. And yes, while I think women have made a lot of strides in many other fields, let's say where careers are concerned, for example, but I think that has not really played out where managing their own money is concerned. And one of the things that I see very often is that people tend to equate economic independence, which is basically earning an income, to financial independence. So I think, I think the importance of being financially independent has not just become trending enough for a lot of women to take it. And I've always said this for the last many years that, we actually need some big celebrity to talk about why it is, very happening to be financially independent. For really a lot more women to take it up. But that being said, I think it's good to see every year there are various surveys that are done. And it's good to see that more and more women are talking about, investing their money and taking investment decisions. I myself get a lot of queries from women on how they can manage their money better. So I think it's all good in the right direction, but I think it's something that needs to be sustained and grown as well.
Can I just add to something she said? Yeah. So I have personally met with women who are super successful in their careers.
Okay.
They run businesses, okay? They run businesses, they are making a ton of money. But when it comes to investment decisions, there's some male in the family who's taking care of that. So they'll have
in the family and not like a male financial advisor.
No, a male in the family. So there's a brother, a mother, a father, or an uncle who's taking care of money matters. But it's not them, because somehow there is a lack of confidence, and this comes from, I think, years and years of training that we have had that we are not good with money. So some male member is taking care of all the money decisions while she's making all the money.
Right. Right.
So this is also a phenomena which I find very fascinating, because here is a woman who's completely independent and making tons of money for herself. But when it comes to investing, she has no control. She has no idea of what's happening in the investment side, because she says, ye mere bas ka baat nahi hai. I can't do it. It's too difficult.
Exactly. Even if it
Yeah,
is
so,
not sure, Mrit, yeah.
I think it's lack of confidence and also, the fear of being judged, right? So, it's always like you take these decisions and then there'll be 10 people telling you, I told you not to do this,
And all
right?
men. And all
Fear
men.
of and all men, yes. So I've had similar experience to what Kavita has had, where I've met women who are surgeons or who are doing, some really high-end coding work and stuff like that. And when it comes to money, it's like, no, I just, and I'm from Bangalore, right? So even I've heard that when women business owners pitch to investors, they always have a male member of the team pitching and not themselves, right? So I think it's just this lack of confidence and the fear of being judged.
Sure, sure. So far we've identified the issues. Now let's help our women viewers, or let's make investing simple for them. Okay. What would be your first few steps, Kavita?
So, see, investing cannot have been made any easier than it is today. Okay. I've been an advisor for the last 20 years, and I know how the industry has progressed. Today, at the click of a button, I can open an account on any of the platforms. Yeah. At the click of a button, I get information on where I'm investing. I have diversified
In regional
assets.
languages.
In regional languages, yes. So there is no excuse for saying that I don't understand. Right? There is a lot of literature available for you to study. You can go to any mutual fund's website. You can learn about these things.
You can watch our shows.
You can watch our shows, yes. and so it's easy to learn, easy to execute, easy to track. So many applications available even for tracking. And even better is today you have lakhs of financial advisors. You have the mutual fund distributors. You have SEBI registered investment advisors such as myself. So you can hire any one of them to advise you if you feel lost and you want support. Right. So I think it's never been easier. There are no excuses now to say that it's difficult.
Exactly.
And it's there on a platter, not just for women, for anybody who wants to be an investor.
Bryn, according to you, the first few steps that you can take.
Well, I think, there's too much of information. And the bigger issue really is that with so much of information, where does one start and what does one do? So I think there's a starting trouble there because, one doesn't know what to make out of all the information that's available. And, Kavita, in my own sessions, one of the basic questions has been, how do I choose a fund, right? And there's so many funds available.
Right.
And again, while there is a big advisory community, again, the number of advisors for the population that we have is quite less. It is a reality that people who have a smaller amount of money to invest cannot really actually hire an advisor. So you do have DIY advisors out there, investors out there. The second question is that, so again, first, how do you choose? There's so many different fund categories, and now, you have so many different factor index funds that are coming again and again. And the second thing that a lot of investors have actually told me is that I don't know what platform to choose. So do I go to my salary banker? Do I go to MF Central? Do I go to one of the other brokerage platforms that are there, for example, right? So how do I start and, what do I do so it gets as basic as that? So I would suggest a couple of things, and I think it's really important. There are some, courses available, basic money management courses that people can take. Of course, there's some very good information that's there on the personal finance shows and also in publications as well. Very, very good information that's there. And I think that's the first thing. What is your source of information, right? It cannot be social media videos. It cannot be fin influencer tips. It has to be credible sources of information where you're actually learning from, right? Second thing is, I think, take that step, right? And it's very important to have a good amount of exposure to equity, which is, let's say, 20 to 30%. So I'm not saying like do it immediately, but I think it's very important to start investing in equities see how it goes, experience it, start with a small amount, experience it, and then, of course, increase the exposure based upon what your goals are and your risk-taking ability is. But I think the two main things are, first learn about it from a credible source. And the second thing would be start investing. And the third would be, where do you start, of course, would be a simple Nifty 50 index fund that you can actually start with, which you can open across whatever platforms that are there.
Sure, sure. I think that you might want to also explain is identifying your risk. Your risk appetite. I mean, see, investing is not gender biased. A male investor or a women investor, the rules of the game are the same.
Yeah,
okay. But it's just that because it's your first step and because you've never done it, and this is going to be something that will be like life-changing experience for you, because you will be having that financial independence in your hand. How do you identify your risk appetite?
So there are many ways to do this. The first is there are many such risk profilers available online. Okay. So they take you through a series of questions to identify. What? They will ask you what your goals are, what your income is like. Are you just started working? Do you have dependents? Do you need money immediately? What are the term for which you're investing? And there are many such similar questions by which the questionnaire will assess your risk profile. Whether you can
even if someone is a homemaker.
Yeah. So a homemaker who needs money for her regular expenses will have a very low risk threshold, right? So very clearly she comes under a conservative investor. But if she is somebody who wants to set aside money for herself and she wants to make long term, so she'll answer those questions accordingly, right? Her goals will be different, and therefore the questionnaire will throw up a profile that is suitable for her. So it all depends on how you answer those questions. And if you truly answer them correctly, some of the risk profiles are amazing. They do give you a very clear picture on how your asset allocation has to be. Now, I'm talking as in expecting that this person doesn't have access to an advisor.
Right.
But if you do, then a certified financial planner or a registered investment advisor would be able to guide you with this whole risk profiling process and an asset allocation plan and put you up in the right path. It's the easiest thing. Having a coach is the easiest thing to do, okay? So have a coach and that person can take you through, or then self-learning is the other mode. And there are risk profilers available. There is, like Mrin said, there are, so many things like Varsity. All these platforms have several educational material on how to start. They even define portfolios based on your risk profile, that you can start with this kind of a portfolio. They suggest the schemes and you can then start investing with them. Kafi youngsters aate hain mere paas and they say, we want to take high risk. And their goal is 2 years from now. And they want to buy a car or they want to buy an iPhone or whatnot. So, there is a mismatch now. You think high risk means fatafat returns. It's not the way that works.
High risk, high reward.
But then there is a term, there's a time, and there's a cost, and the cost is volatility. So if investors don't understand that, they end up taking the best performing last 3 years best performing fund, and
that will
most
come
likely
as per your understanding towards the asset class. But then we will come down to this question where mutual funds are the best way to start your investment journey. But before that, I just want to know from both of you, in your experience, are women really risk averse? Mrin, what do you say?
I would say yes, mostly, because like even if you look at the household data across India, right, you see that the allocation to equities is actually less than 10%. So while there is a lot of noise about equity investing at present, the actual allocations still remain very low, whether it's men or women, and I think in women it's even lower.
Yeah. What about you?
My opinion is women can take risk just as much as men can. Okay. If at all they do choose safer assets, women do prefer
That's
to
also
have.
because they understand those asset classes,
Exactly.
right?
So if their understanding is that, and also, see, like I just said, you have a patriarchal mindset. Yeah. If you've come from that, then you don't want to take wrong decisions, which is very easy to happen if you take equities, for example. So you take the safer path, which is buying gold, which is buying property, putting investments in FDs. So that does happen, but I think that risk aversion is more a mental tuning. It's a behavioral trait. Exactly. which can be corrected if they have the right advice.
Knowledge.
And knowledge.
Yeah,
yes,
exactly. And in fact, in my experience, women are much better long-term investors with great patience and discipline in their investments.
Yes, that's true.
Yeah.
Women understand risk taking.
Yeah.
Taking a very balanced view of reward versus risk. And they don't, I personally have not seen women wanting to indulge in speculation.
Speculation, yeah, exactly.
But risk-taking ability and desire is there as much as it is in men. Right. In fact, I see men more prone to taking speculative bets.
Exactly.
So if speculation is the name of the game, then yes, women don't speculate as much as men do. But risk-taking ability and desire is there very much.
Sure. All right. So let's talk about, Mrin, now let's focus on why mutual funds, the first step towards your investing journey.
Well, there are more than 5,000 listed stocks in India. And with so many stocks, it's really difficult to figure out what to buy, when to buy, how long do I hold on this investment? What do I do if the stock falls? What do I do if the stock rises? And the other aspect is, do we really have the resources to, one, get the right information? Do we actually have the time to actually do all the research and to keep monitoring and tracking these stocks? And when you have a simpler instrument that's available, that is firstly highly regulated, very, very low cost again, and very easily accessible in terms of investing, and also, where there is not, while, it is recommended to hold for the long term, but again, the accessibility to the funds is there in case of a dire situation, right? I would say that, rather than trying to identify stocks, and the other thing that happens, when you're trying to build a stock portfolio, which I've typically seen, is that people tend to be very focused on a set of stocks and they don't really have any sectoral or any stock limits that are there. So the portfolios get very, very concentrated and very skewed, and could hence be very volatile. So I would say that a better way to invest would be a mutual fund, which can offer you more diversification. And again, within the funds, of course, given the fact that most women already have a large exposure to fixed income instruments in some form or the other, I think it's a better option to really look at the equity mutual funds. Of course, one of the main things to keep in mind is that you do need to have at least a 7 to 10 year time frame when you are investing in equities, because below that it could be volatile for sure. And within the equity categories, I would recommend the index funds. I would just the plain vanilla index funds. I would recommend flexi cap funds. And if you do have ability to take higher risk, face higher volatility, you can look at mid cap funds and small cap funds as well. But I don't, so these are good categories for people to really start off with.
Right. But then, Kavita, within the categories also, you have a lot of options. For someone who's just doing it for the first time, will be so confused that which fund to buy from one category.
Very true. So let's say I'm assuming now there is an asset allocation in place. And the person knows that she can invest, say out of a 100 rupee portfolio, she wants to invest 30 rupees into equities. Right? I'm assuming that's your question. So how do you choose within that 30 rupees, what do I buy? If you're starting, if you have just started your investment journey, go for the plain vanilla stuff. What is plain vanilla? Your large cap funds.
So yes, any large cap fund, or within that also
you can buy an index fund.
Okay.
So rather than doing an ETF, do an index fund, because it's easier to purchase, it's easier to track, it comes in your CAMS records. There are a lot of other operational things that are easy. You can buy smart beta funds. So those are also available plenty, and it's very easy to see the risk reward ratios of these kind of investments. A lot of data available on them, and there is no fund manager risk. Take any large category flexi cap. So you have a mix of everything. And then if you have still some left and you want to take that extra punch of returns, choose a thematic fund, a business cycle fund. I don't really recommend small and mid caps immediately if you have, unless you have a 7-year plus kind of view, then maybe small and mid caps, because a flexi cap will own some small and mid anyways. And this should be sufficient to take care of your equity portion. But before you do equities, do ensure that you have an emergency fund in the form of liquid
That's
funds,
important, yeah.
a fixed deposit, arbitrage, yeah, any of these safe assets, you should have at least 6 months to 1 year of your expenses in these safe assets. Then go and build. This is the foundation. Your emergency fund is the foundation, because if you don't have that and you move to equities, equities tend to be volatile. You can't just liquidate anytime you need, and keep a view of 5 years plus there. So for liquid money, have your emergency and then build on that.
I think goal planning and goal alignment is also a very crucial part of your entire financial portfolio. Simran, what would be your points towards designing your portfolio which will be goal aligned?
Before you invest any money, or anytime you have any money to invest, the first question you need to ask yourself is that, what am I investing this money for? What is the end use of the money, which is your goal, and what is the time period to the goal? And typically, what investors tend to do is that I have some money available right now. Let's say this asset class or this particular investment has been doing well, and I'll invest money in this, and then I'll figure out later on what to do, when to remove the money. But actually, any investment that you do needs to be linked to a financial goal, because then you're more likely to choose the right investment and optimize, your portfolio as well. So the first thing, as I said, is to figure out what is the time period that you can hold this money for, depending upon the goal that you have, and then choose instruments based on that. Now, let's say that you have short-term goals, which are typically more like 3 to 4 years in nature. Then, of course, you have a whole variety of debt funds that are available. Again, for example, for a 3 to 4 year period, you can look at a short duration debt fund for an investment. And again, if the holding period, or let's say your goal is between 5 to 7 years, you could consider balance funds, which invest in both equities and bonds. And if your holding period is for long term, which is 7 years and above, is where you can look at having pure equity funds. That's not to say that, if let's say you have a 10-year goal, it's not to say that you can't hold a debt fund. You can also hold a debt fund for 10 years. So only the funds that I've recommended, I'm saying these are like the minimum holding periods that you want to have before looking at these particular investments. So again, based on the risk that you can take, figure out how much you want to put. So this is the way you basically then decide how you want to do your allocation. Of course, this is very, very simplistic way that I've spoken about, more for DIY investors. Ideally, it's always good that if you can work on your goals with a financial advisor, because they would be able to do the asset allocation well for you. But if you're doing it on your own, this is a very, very simple way. How much of my money can I put at risk? And then tie it in with your goals, and then divide it between the asset classes.
Exactly, that's the whole idea, to keep your investments simple. I mean, there can be combinations of a lot of strategies that one can go for, but then just to take the first step, just keep it simple. I'm pressed on time, and which is why I need to end the discussion. Thank you so much, both of you, for being on the show and helping our women viewers and women investors begin their, or take their first step towards their financially independent life. Thank you so much, both of you, for being on the show today.
Thank you for having us.
Thank you. And it's a wrap from my end also. Thank you so much for watching. Goodbye.